Welcome back, and joining us to put the day's markets action into perspective is Muhammed Wagley from Sasfin Wealth. Thank you so much for your time, Muhammed. There's been quite some volatility on the JSE today. At some point it had eked out a slight gain and then it ended up with some slight losses, but now ending off the day basically flat. What has interested me though is the weakness that we have seen on the rand. Now, dangerously close to that 19 rand level against the US dollar. And I do understand that the ANC right now is involved in internal talks to see which is, a suitable coalition partner or partners for them. But is that all that's affecting the volatility and the kind of negative sentiment that we are seeing there, the risk-off trade that we are seeing today?
So I'd say broadly speaking, first of all, Zinati, thank you so much for having me on. But I would very much agree with you. I would think really the main reason is basically news coming out the ANC, just in terms of, leaning towards forming a government of national unity. Seems the market didn't really like the news too much. I think there was quite a bit of optimism that we would see sort of an ANC-led coalition that was a bit more business friendly and maybe not with some of the left-leaning parties. I think today's news sort of went against that notion. So we saw quite a bit of pressure there. But there was one other thing I think that might have played a role. Against this backdrop, we also saw weaker than expected SA GDP numbers for the first quarter. I think that sort of further reinforced the pressure on the rand, as well as really, the overall uncertainty that we're seeing now. You touched on this earlier, but in terms of movements on the JSE, it's actually been pretty muted. It was flat, had a bit of a wobble, then was flat again, and then sort of ended pretty much unchanged. So we're seeing a lot of choppiness, a lot of uncertainty. I imagine this is probably going to be the case until we've got that clarity that you mentioned just in relation to how the government's going to be operating over the next 5 years. So the sooner we get clarity there, the better.
Well, interesting, because looking at the labor data that's been coming out of the US yesterday, we had the job openings coming out less than what markets had anticipated at a more than 3 year low. And then today we had the ADP private payrolls for May also showing that hiring slowed in May compared to what analysts had expected. And this would really signal that, okay, markets are maybe, starting to open up the conversations of the Fed cutting rates. And then on top of that, the ECB expected to start the cutting rate cycle tomorrow. Why is that not filtering through? Is just a big lag effect right now between what's happening in the US markets and here?
So I think, needless to say, we've got sort of other things that are South Africa specific that are a bit more of a priority, a bit more important right now. So I think it will be sort of a bit of an overhang until that's resolved, But, we are seeing a lot of optimism about the rate cuts. I think you mentioned it a little bit earlier in the segment. People are now pricing in a September rate cut with respect to the states. You mentioned the ECB expected to cut rates tomorrow. That's very likely to happen. It's almost priced in as a certainty. That's at least the way the market's looking at it. And then maybe not an hour ago, or probably just a little bit more than that, we got news that the Canadians were actually cutting rates by 25 basis points. So quite a bit of risk on sentiment going on currently. It's just missing us, which is not great, but I think there are other reasons for that.
All right. Well, I will be holding my breath for that ECB rate cut tomorrow, crossing fingers there. Let's go on to company news that came out of the JSE. 91 came out with its annual results. A pretty gloomy picture there, saying that assets under management decreased by 3%, talking about challenging market conditions. I did see that share giving up more than 4% at some point. Not a surprise on that reaction?
Yeah, given sort of the top line that came out, with these types of companies, you're always looking at the assets under management numbers. Now, they fell by 3%. You mentioned they also decreased the dividend, and they pointed to sort of a lot of pressure within sort of the South African context. This has been ongoing for a couple of years, but I think something that may have played a part here is that we also got numbers out from Signia a little bit earlier today as well. And, their AUMs went up. So I think that contrast maybe put a bit of pressure on them, not to sort of invalidate what they're saying. It has been, quite a tough environment. The higher for longer interest rate environment hasn't necessarily helped them too much either. But I think, there's not really too much cause for concern. I think they're well positioned going forward. But on the day, it did, I suppose, make sense that they fell quite a bit. They were one of the big laggers that I counted on the day.
Well, actually, on Signia, that divergence, what is responsible for that? Is it just in terms of them, the focus that they have on ETFs? What was it there?
It seems like they did quite well in the retail space. So despite, the challenging environment, seems like the smaller client was, actually buying into the product. In terms of the financial markets, their products did, phenomenally well over the past year and a half, probably maybe a little bit longer than that as well. And I think that was probably the big boon for them. I think their dividend was also a bit up. The bottom line, top line was also up as well. So I think just the financial performance overall, broadly speaking, was quite a bit better.
All right. Well, let's go into property, Muhammad, because Vukile released its year-end results. Positive financial metrics there in both geographies, even vacancies of less than 2% in both South Africa and Spain. We did see the stock there surging over 5%. What did you make of these numbers? Would you say that Vukile is a quality player in the property sector?
Very strong numbers, it has to be said. I think within the context of Vukile, we're always kind of looking for their Spain exposure, see how well that Castellana portfolio is doing. But we got double-digit sort of normalized operating income growth there. And then, the vacancies you mentioned were very low, 1.1%. But I think the big surprise was, the South African context. It is a challenging environment, but they were really strong within that space. Vacancies were just under 2% there. So I think they did quite well in both geographies. I don't think the market was really expecting that. Reads to me like it was a bit of a surprise. But yeah, definitely a quality business for sure.
All right. Before we get to your stock pick, a quick one. Capital Appreciation also releasing annual results there. Revenue growing 9%, exceeding that 1 billion rand mark. That growth even filtered through to the bottom line with HEPS up 83%. We did see also that share price climbing almost 4% at some point. Is the small cap one to be appreciated?
Very much so. I was quite impressed with these numbers. Very strong set of results. And, this is a fintech company operating sort of in all the right places. Contrast that with like a lot of the legacy businesses that we see on the JSE. This one is very different. They're seeing quite a bit of demand for their products, for their technology solutions, and this is all within a context of a very challenging environment. I didn't see them make mention of load shedding or Transnet too much in those results. So really good company, and good to see this type of company doing well within South Africa, within the current environment as well. Very encouraging.
All right. Well, let's get to another encouraging stock. Your stock pick for today.
So I think, needless to say, within the current context, I think I'm waiting for a bit of clarity as to what's going on locally before I put my neck out and pick a local company. So I'm going to go play it a little bit more safer. And I'm going to, stick to the themes that I've been going with, which are that of sort of technology and artificial intelligence. Within that context, thinking that the American market is like really raring to go. I think you want to have some exposure to a company like Microsoft. They're very well diversified across the AI space, and that is closer to the beginning of the story than it is towards the end. So I definitely go with Microsoft. If you're very much topped up on Microsoft, have a look at Google, have a look at Meta. These are the types of companies that you want to have some exposure to.
All right. Well, thank you so much for your time and for your insights on what has been moving investors' money today. That was Muhammed Wagley from Sasfin Wealth.